All right. Episode 42 of Exit Liquidity. We got Bob Baxley, core contributor at Maverick Protocol here. How you doing, Bob?
Hey guys, good. How you doing?
So Maverick is a very interesting DEX that has popped into the scene, launched in early March. I'll let you kind of explain it at a high level in a sec, but we'd like to hear. We did a little bit of homework. Saw that you previously were in cybersecurity, and before that were working on research at Georgia Tech. Could you get into your background a bit there, just for the
Sure.
audience?
Yeah, sure. So I started out as an academic at Georgia Tech, teaching and doing research. I did that for a handful of years, and then I went off and started a venture-backed startup called cybersecurity startup called Bastille, and CTO there for 8 or so years. So Bastille, we built a cybersecurity product that would scan the radio frequency signals inside of an environment and tell you if a cell phone was in a restricted area or just give you situational awareness about all the emitters and uh, whether they might be attacking your infrastructure inside of a facility. So yeah, my background is math and signal processing and software. But I caught the crypto bug in maybe 2017 and then got into more and more into it and then kind of jumped professionally full time in 2021.
Yeah, I've heard that your co-founder at that cybersecurity office was kind of crypto pilled initially, and kind of got you involved in that ecosystem as well. What drew you to kind of crypto? I feel like I can tell that there is a little bit of uh, ethos driven value that is built into Mav, and how you guys uh, envision it to become. Could you go in depth into how you feel about crypto?
Sure. I mean, to me, honestly, the biggest part is just the tech. Uh, so I mean, it's just amazing this kind of evolution from. I like to think about it, like Web 2 SaaS companies. The user is not directly paying for the infrastructure. So you're paying a company. You as a user are paying a company, and they maintain AWS infrastructure, whatever it is, to have the apps work. This idea in crypto that the infrastructure is permissionless and that you know uh, the builders, the company, whatever it may be, is putting smart contracts on chain, and then users, that chain is the infrastructure and it will always be there, and then the user is paying per use with gas fees and whatnot. It's just super cool. So it was really the tech that drew me to it, kind of the challenge, the security challenges, and the math challenges around finance. So I was studying a lot of liquidity provisioning and kind of the math and the returns there, and just saw an opportunity to do all of that better. Um, so that the existing A&Ms weren't super efficient, and we saw an opportunity there. So there was that, and also just the crypto, just the tech is super cool. I might have lost you, Cedo.
Walk us through the kind of thought process of creating something like math. There seems to be, and there is a lot of math involved, and you really are solving a core issue across, LPing being the most important. Were you LPing on Uniswap and just kind of hated the experience? What was the driver for creating math the way it is?
Yeah, so it was a bit of LPing, um, and not necessarily hating the experience, just thinking it could be better. But it's also I like to analyze data, so just pulling data and looking at returns and realizing like you know uh, if you're not LPing in a concentrated enough position, it's all based on what kind of bets you want to make as an investor. But there just wasn't a lot of flexibility to choose how you make these bets, and I could see that in the data. Like certain LPs, they have ranges that are too wide or they're out of range, and they just weren't getting great returns. And with other positions, you could do really well. So it was really just that data driven, my own research, looking at returns and whatnot, that gave us some insights around how we should uh, add new degrees of freedom to existing AMMs to help LPs figure out or give them more degrees of freedom to where to put their capital.
Yeah. And
So,
before we get into the exact details, the show is called Exit Liquidity. We like
sure.
to ask a very common question to every guest of describing your experience in crypto from the beginning, in reference to maybe some moments that you might have been exit liquidity along the way.
Uh, well, and everybody starts out as exit liquidity, right? I'm actually pretty conservative uh, investor, so I've mostly it's just ETH and a little Bitcoin early on, but got out of Bitcoin. Definitely an ETH maximalist, Ethereum maximalist. So I don't think I did own some crypto kitties, so that was bought and sold crypto kitties, bred crypto kitties. Um, but yeah, nothing too crazy there.
That's interesting. I think that's the most tame exit liquidity story we've had so far. Some people are like, "Oh yeah, like I got burned playing like ohm forks on Polygon, like some like weird shit like that." CryptoKitties is an interesting one. I want to get a little bit into like how Maverick works. First of all, just to like set the stage, I think you mentioned earlier that um you guys first had the idea, or you raised your seed round in 2021. What did the AMM space look like when you first had the idea for Maverick then? And um was it similar to what it is today, or at least like the AMM model itself? Was it still like a similar like concentrated model with moving ranges, or has it changed a lot since then?
Yeah, so I think we started building in summer 2021, and the first thing we were building towards actually was a derivatives dex. So we had some interesting ideas there, and part of it was a virtual AMM. So you have an AMM under the hood that's doing the pricing for the derivatives, uh, and it became clear that, well, to innovate beyond what people had already done, we wanted to add some more degrees of freedom to that virtual AMM. So Perps already had this VMM model using UniV2, and they were planning to go to UniV3. And we thought there was some innovation to be done there. So we built some of that, but we quickly realized, like, if we're going to build a novel AMM that's useful for perps or derivatives, that AMM would also be like super useful for spot. So I'd say in 2022 we kind of pivoted from building a virtual AMM to building just an AMM for spot, and maybe one day somebody will still wrap our AMM and build derivatives on top of it. Um, so that's where we started. And I think one of the things that is cumbersome in kind of the virtual AMM model is, uh, if it gets concentrated, is having to reconcentrate. It's actually, so I'd say the first idea we started out with, we called it the Gaussian AMM. So the idea was you could model the liquidity as a Gaussian distribution in the price liquidity domain, which is like the domain that UniV3 operates in. And then you could move the mean, the center point of that distribution based on some parameters. And so you'd let LPs join this distribution, and then you'd move them around. It's not, it's a little bit like Curve V2, or maybe a lot of bit like Curve V2 actually, but the um, math is a little cleaner if you model as a Gaussian versus how they do it. And we actually did a whole bunch of testing there. It was even on testnet, and did a bunch of work there. And then it didn't work quite as well as we thought it would. One of the issues is that we realized is, you don't really want to build a system where you're forcing all users into the same kind of position. There's no kind of magic money making machine for LPs. So the idea that you've got some LP position that's going to do well in all kinds of market conditions is just wrong. And I think we maybe had some instincts about that, but the data, kind of the back testing and whatnot, made it clear that wasn't a good approach. And that's kind of the problem with AMMs other than UniV3, is all the LPs are kind of in the same boat. They don't have any degrees of freedom. So that's when we kind of pivoted to, let's build an AMM that gives you a lot more degree of freedom. than any existing AMM. So we went from kind of, let's put all the LPs in one boat and think up some smart strategy where we follow price in an automated way on chain, to let's actually just outsource those kinds of decisions to the LPs. Let's give them all kinds of options for how the smart contract can move their liquidity with respect to price or distribution, but let's ultimately give them the degrees of freedom, and that's how you build kind of a fundamental, money Lego is what we're trying to build. So that was the evolution there.
Gotcha. Yeah, that's we've had a lot of discussion on podcast, and I think we've talked about it a bit off podcast as well, as to like just the nature of LPing, I guess. We had a guest on not long ago, from Aori, which is like an order book based options protocol, but they're also offering spot trading, and uh he had a very polarizing view on AMMs, and kind of was the first time we heard the idea of like a more nuanced opinion, I guess, on LP profitability across different AMM models. Can you give us just like a quick overview on how Maverick works exactly? Specifically just the AMM model?
Sure. And maybe even before that, I mean, talk a little bit. I think it's a hot topic, like, or maybe it was hotter 6 months ago.
Mm,
The idea that LPs are just getting owned. There was a Twitter spat around a plot that it got put out that was just down into the right
yeah.
of LP returns, and I actually got in on that thread, and the math was just wrong there. But anyway, so I think that has been a hot topic. It's clear that you can lose money LPing. It's also clear that you can make money LPing. So I think anybody who takes kind of absolutist view that you're always losing money is wrong.
Hmm.
I think sometimes people frame it as, well, if I took this optimal strategy, either with hindsight or foresight, and I had, all the infrastructure to orchestrate um, sub-second arbing, then maybe I could do better, than an LP with the same sort of risk profile. And that may also be true, but that's not available to lots of people. And I think kind of the last point on that thrust is, people think about AMMs and DEXs as two-party systems where you've got a traders and you've got LPs. But really, a huge user of DEXs is protocols. So they're using protocol to get liquidity on chain, to get liquidity for whatever their token is, and they end up being the big users. And it's not unlike, if you were to IPO a public company, you want liquidity for your shares, and so the investment bank that's doing the IPO is gonna cape liquidity. That's part of the deal that you strike with them. And I see AMMs as kind of a similar sort of thing. It's an easy way uh, um, to provide liquidity on chain for a new token. So I think, um, yeah, as just a general defense of the idea of AMMs, I think it's not. AMMs are good, and I think order books are more flexible. So if you can pull off an order book, there's other issues there. If you can pull off an order book, it's certainly more flexible than an AMM. But it's also a lot more challenging. So now, instead of fees, you're having to make money in spreads, and you have to be a very sophisticated actor to make money that way. And that's hard to do on smart contracts and whatnot. So I don't think it's either or. I don't think order books are bad, but I think AMMs are pretty useful. So with that, yeah, I can maybe get into the how Maverick works. So I imagine most listeners are familiar with Uni v2 and Uni v3. I think that's a good jumping off point. So I'd say the arc of AMMs started with XYK AMMs like Uni v2. So XYKs are super elegant and simple math. The amount of X and Y in the pool follows an invariant where X times Y equals K or L, some liquidity value. And if you just specify that equation, then you can set pricing. So you can say, well, if somebody adds some X to the pool, this is how much Y I'm going to give them out. And I just have to be on this XY equals K curve. So it's elegant, it's easy. It covers all price ranges, which is cool. But the downside is you're kind of implicitly LPing from price equals 0 to price equals infinity. So for a stable coin, for instance, that doesn't make any sense. You know the price is going to be 1. There's no reason to support price equals 0 or infinity. So Michael at Curve came up with stable swap to solve that problem. So let's concentrate liquidity around some price using a different curve, and that was a super cool idea. And then I'd say that the next kind of shoulder of giants that we're standing on is Hayden and the UniV3 team, where they said, well, let's just parameterize this. So let's look at price versus liquidity and let LPs choose a range in the price space where they can put their liquidity. And if they think price will stay in some range, they can make a really narrow range and maximize their fees, maximize their capital efficiency is how they frame it. So Maverick takes that idea. So you can think about UniV3 adding a new degree of freedom to existing AMMs where LPs can choose where in price they stake their liquidity. Maverick adds 2 more degrees of freedom. So in UniV3, one of the issues is you can only stake a uniform distribution of liquidity, basically flat in price, rectangle. And Maverick, you can choose to have your liquidity be distributed any distribution you want. So you could do a Gaussian distribution. The curve distribution ends up being kind of an exponential distribution. So you can replicate Curve's AMM price curve in Maverick. And then we after we built it, or as we were kind of talking to the community while we were building it, we realized there's all these use cases for asymmetric distributions of liquidity. And I guess you guys had Token Price on last week. He's deep in the kind of liquidity weeds. When he was at Liquidity, part of Liquidity, LUSD's minting model is this kind of asymmetric minting model. And so for them, it makes sense to have asymmetric liquidity distributions. And so you'll see that in Maverick, you get these kind of ramp distributions that are not symmetric. And then so asymmetric distributions or arbitrary distributions is one thing Maverick offers. The other thing is, in Maverick, you can, as an LP, you can have your liquidity follow price. So there's a time-weighted average price that the smart contract, the AMM, tracks. And as price moves, as people swap, you can have your liquidity follow that price. And we came up with that because we saw in UniV3, for instance, the most successful LPs typically operate in stable pools, and they're following price a BIP at a time. And they're doing that so they can stay in range. And so we thought, well, why not democratize that and put that on chain? So when you see it happening in Uniswap, it's sophisticated LPs that have off-chain infrastructure that's reminting NFTs, position NFTs for them. And Maverick, you can have the smart contract handle all of that movement for you kind of seamlessly. So yeah, it was a long answer, but that's what we're doing.
Yeah. Yeah, and definitely a lot to get into there. So you started off by talking about like LP profitability a little bit, and I think a lot of the research that we've seen on UniV3 LPing specifically shows that the way that it like looks at the data is it treats like the ETH/USDC pool as like one large LP, and it says if all this liquidity belongs to one person, they lose in the long run. Like like you said, the graph is down and to the right. Have you guys conducted any similar research yourself, and do you have any idea of what that like profit curve looks like for Maverick? And like obviously it would be a much more difficult process, I think, given that you have much more options for how to LP specifically. But also like you can take an entirely different methodology than approaching it as one large LP. So I'm wondering like if you guys have done that. If you haven't done it, are you thinking about it? Or do you have any idea of what the results might look like?
Yeah. So we've got like an interactive kind of backtest dashboard in the docs where you can go see there's a few hundred like 1 month price trajectories, and you could see if I was in this price trajectory, the real price trajectories from token pairs for a given month, and you could see if I was in this position or this kind of movement mode. We call it movement mode. What's your return? I think one thing that's probably misunderstood about AMMs is mostly you're betting that the price will go sideways. So if the price doesn't go sideways, you've just sold the more valuable asset. And in retrospect, that looks like a dumb decision because the price went up and you sold the thing that just went up. So, I mean, you don't really have the you don't know that that's going to happen beforehand, but you do know that you should know if you're an LPing, you should know that you're really betting on the price to go sideways. So if you're coming out of DeFi summer, if you're coming out of a giant ETH price pump or price dump, and your reference point was where you started, so you started 50-50 ETH USDC or something, and one of those goes off the rails, you're definitely going to lose money. That the bet you're making is whether you know it or not, is that the price will go sideways. So I think I haven't actually looked. I've been kind of deep in coding world for a little while here, but the price of ETH has gone sideways for a long time now. So I wouldn't be shocked if even like the whole pool, if you do what you said, which is maybe not the right analysis, if you treat the pool as one LP, it's maybe done fine even recently. So LPing, I'm not saying that's for everyone. I'm not saying that's a no investment advice here. I'm just saying, you are making an explicit bet, and if that bet turns out to be right, if the price goes sideways, then you're going to do fine.
Yeah. Yeah. I mean, I work with Panoptic a little bit, and a big part of like their whole thesis is that an LP is just a short straddle. You're just going short volatility. You're earning fees within your range, obviously, but anywhere outside of that, you're gonna be losing.
Yep.
I want to get a little bit more into the LP profitability issue from like a more holistic standpoint. You started off saying like, and I think I agree with you on this definitely, in that AMMs aren't all that bad, or they're not always bad, at least. Um, where where do you kind of see the future heading when it comes to dexes, whether that's spot or derivatives? Do you think that AMMs will get to a point where they can kind of provide everything that DeFi might need when it comes to trading? Do you think that order books will always have their place, and that'll kind of be distinct as to what's better for what? Um, or like, will we see more hybrid models between the two, like stuff like I guess I don't think there's any spot models, but something like Vertex or Drift, where it's a hybrid, or it's like an AMM, an order book backed by an AMM. Where do you kind of see like the divide between those heading in the future?
I think I I think we got the broad strokes right already, right? So the vision for crypto is we got real world assets tokenized on chain one day, right? And clearly we've already got a pretty robust model for liquidity. So I don't think we need giant new innovations here. I think what we're doing at Maverick, I mean, even XYK is fine for lots of use cases. I think you'll see kind of niche use cases that need more sophisticated degrees of freedom, or maybe work in one model versus another. Uh, but I don't think we'll see, like, we basically got it. I think we're mostly blocked by regulation and policy, I would say. One thing that's fascinating to me is this idea that that AMMs enable some third party, usually a protocol, to incentivize liquidity, and that kind of decentralized incentivizing of deep liquidity in an order book, like, doesn't exist. It could exist on chain, but I'd say that AMMs have kind of um, have made that possible in a way that it doesn't really exist in TradFi. I mean, I guess most things are just not as decentralized, not as distributed in TradFi. So that helps you bootstrap low liquidity tokens, or one day when we've got more tokenized things, low liquidity tokenized things. And I think that's a really nice feature of AMMs. That gets back to like the third player in this triangle is the protocols, or whoever wants liquidity on the token. And so giving them a degree of freedom to incentivize liquidity, and not just generic liquidity, but in Maverick, they can incentivize liquidity anywhere on the price curve they want, is a pretty neat mechanism that's unique to AMMs.
That's interesting. I think especially now, that's definitely a hot take, or what you said at the beginning, that we've kind of figured it out with AMMs. I th- I think I definitely think we're on the right track. Um, I think we'll get there. There's no doubt about that. But as to whether or not we're there yet, that's a more difficult question for me to answer. I actually wouldn't know to say whether we are or whether we aren't. I think we could still see quite a bit more. And it's like, Maverick launched in March, so it's not like the space has slowed down in innovation in any regard. I think there's still a lot going on that we can kind of say that there's more on the table still, but we're definitely like on the right track there. Um, I want to talk a little bit about capital efficiency,
Mhm.
because Maverick, the most common post that you see on Twitter these days, I think, about Maverick is they're doing uh, X million billion in daily volume, weekly volume, with like 1/10 of the liquidity that Uniswap or Curve is doing it with. And specifically, I think we saw a lot of that, especially when you guys first, I think, launched your token, or when you first announced the airdrop program. We saw a lot of that around LSD specifically. You guys
Mhm.
did a great job attracting tons of LSD volume. What makes Maverick good for LSDs specifically, as opposed to like a curve stable swap curve, or just like a regular UniV3 pool?
Well, that one of the things unique about LSDs is that you know the price is going to move, 3 or 4% a year, right? And as we were just saying, if you LP in Uni V2 V3, like that if the price doesn't go sideways, you're losing by definition. And so I think Lido, when they first launched, they tried to launch a STE rebases so that it's always price one. And I think they did that so it could work well with the stable swap pool, because they realized this kind of friction where if you have a value accruing token like wrap staked ETH or Sweeth or any of them, all the new LSDs are not rebasing. That you'll just lose your shirt as an LP because the price will always move, and it's tons of new complexity because now the LPs have to move with price. But I'd say that the ecosystem, it's clear that people don't like rebasing tokens. It's kind of awkward. It makes it difficult with smart contracts if the total supply is always changing. And so wrap staked ETH and other non-rebasing LSTs have won. So once you're in that world, now when I pair wrap staked ETH with ETH, I know the wrap staked ETH is going to grow 3 to 5% a year in price relative to ETH. And so you need some mechanism to deal with that. And it's not as if it's super volatile. So you still want to LP a super narrow range. So one option to deal with that is to just be in an XYK kind of pool, and then you can handle price all the way to infinity. But if you do that, you don't have very much depth. And so one of the cool things that Maverick has done for Swell and for Sweeth, for instance, is allowed Swell's like incentivized a bunch of liquidity right in price in one of these movement mode positions, which means that their liquidity will move with price as price goes up without anyone having to do anything. So I think one of the things that Swell brags about is they've got slippage that's comparable with like Lido, even though they've got a lot less liquidity in the token. So I think that's another example of like protocols using clever AMM things and clever AMM incentives to differentiate themselves. If you're a new token, you're trying to convince people to use you, and you've got kind of similar tokens out there. One of the differentiators you can use is, look, there's tons of liquidity. Slippage is almost zero. This token has tons of. You can use it as the quote asset in any pair because it's got this giant pool that people can move through. So that was a long answer. The short answer is basically we have these movement modes that follow price, and LSTs move price in a deterministic way, or kind of deterministic way. So you need that.
Yeah, I think that was like a light bulb for me when I was reading up on Maverick. Kind of the efficiencies that come with being able to incentivize these specific modes, like the both mode and or the right mode. Could you just quickly go through the different modes and also explain why these how these like liquidity bins move, like why that innovation exists, and how the gas mechanisms work for that?
Yeah, sure. Well, so just kind of on the last thought, a lot of the volume we see in Maverick is actually through stable pools. And so stable pools, even though the price is stable, the price is moving basis points at a time. And you really want to be, no more than a basis point wide in the stable pool to maximize your capital efficiency. So, and there you tend to see people in mode both, which moves in both directions with price to follow price. And so that's where we get tons of volume. And before I jump into the explanation, I think another insight that we realized, we've seen kind of a trend of DEXs trying to figure out the optimal fee for the LPs. So I think that's one of the things that Hooks is trying to do with Uniswap. There's people trying to build hooks that do that. And there's been a few DEXs that have, like CrocSwap, where their whole part of their shtick is, look, we'll figure out the optimal fee, and we'll just set the pool fee in some automated way so that you maximize return. I think that's super misguided. I think once you start advertising, and once you think you have a mechanism that's basically a money printing machine, you think you're a hedge fund and people can just invest in this algorithm and it will just work forever, is not going to work. Somebody's going to scoop you in price, they'll go a bit below you in fee or whatever, and now you're not getting any volume. So it's all well and good to say, look, let's just raise our fees to avoid toxic flow, but I don't think it's that toxic. That flow is paying you fees, and you certainly need to think about what fee you want to offer. But that should be a decision kind of left up to the LPs. The idea that you can optimize that and have it coded in a smart contract to have an optimal fee is super misguided, I think. So that's a long way of saying, like, one of the degrees of freedom in Maverick is the fees are not fixed. You can start a pool with any fee you want. I think early in the DeFi world, Uniswap picked just a couple of fee tiers because they didn't want to fragment liquidity. But in the age of solvers and aggregators, fragmenting liquidity across pools is not a big deal at all. And so you'll see in Maverick, there's tons of pools with the same asset pair, same other parameters, just the fee is different. And I think that's how ultimately somebody's going to find a fee tier that's really profitable, and that's where the liquidity will migrate, and then the conditions of the market may change and they'll migrate to a new fee tier. But that's going to be really hard to optimize that on chain. And so it goes back to our story where we had this epiphany early on, like, we need to not be prescriptive about how people LP. We need to just give degrees of freedom, and that becomes a Swiss Army knife for them to build whatever liquidity they want. So back to how Maverick works. When you stake a pool, you're adding liquidity to what we call bins, and bins live inside of ticks. So when you create a pool, you specify how wide a tick is. So for a stable pool, a tick may be just a basis point. For volatile pair, it could be 10% wide. And so you LP in one of these bins, and there's 4 kinds of bins. There's static bins that don't move with price. There's mode both bins that move in both directions with price. And then there's a mode left bin that moves only left with price, and the mode right bin that moves only right with price. And so the 2 directional bins end up being kind of a directional bet on price. So you're not stuck with just a sideways bet on price. And the mode both bin ends up being a kind of hyper sideways bet, or hyper direction, one direction bet. In mode both, you can get run over if the price goes like this. Every time you kind of follow price, if you follow price 1 basis point to the right, or 1% to the right and 1% to the left, you've just lost 1% in what's essentially permanent loss. So the mode both only really makes sense for very stable pairs, either LSTs or stable coins. So under the hood, the smart contract is tracking a TWAP of price, and the look back of the TWAP, the default is 3 hours in the UI, but you can interact with the smart contract and create whatever look back you want. So if you want it to follow really slowly with price, you could set the look back to be a day. If you want it to follow faster, you could set it to be an hour. And basically, after each swap happens, the smart contract looks at any bins that got swapped through, and it decides whether, if they're a movement bin, if the price has moved right, the bin needs to move right, so it'll be adjacent to price. So basically, you're an LP in a bin, and the way we do this scalably on the smart contract is we just move the whole bin. And the LP structure inside the bin, the balances of each user just stays the same. And so ultimately, the swapper pays the gas for the movement, and that tends to be 20K of extra gas for a swapper. It's mostly transparent to them, and it doesn't happen every swap. This is only happening when the price moves like a tick or two over. Um, so you'll see like 1 out of 100 swaps has a little bit of extra gas tacked on because it's moving an entire bin of LPs, and that's how that works.
Awesome. Yeah, I think just that problem alone being solved, and I've heard you describe it before of you know LPing on Uniswap and having to pay gas every time the price moves out of your range. It just seems like an efficiency that I think you guys solved very well. For you talked a little bit about LSTs and the incentivization mechanisms, and you've spoken about kind of LST war happening on Maverick. How was the BD partnership process like to like end up with such a strong LST hub? Was it like a clear goal from day one, or was that a sector you guys were aiming to go after later on?
No, actually, it sounds like in hindsight that I know how all this stuff was going to work, but we didn't know that when we built it. We just built this flexible AMM, and then stablecoins came and said, "Well, this asymmetric stuff is pretty cool. We can use it." And then LSTs came and said, "Well, following price is very very useful for non-rebasing LSTs." So uh, yeah, I think we just got connected to you just get connected to people when you build things. So it's just getting connected and having chats about what the AMM does, and then hearing from protocols about what their pain points are in liquidity. So that just kind of evolved.
Yeah, and you have a similar tokenomics model. You've had the airdrop program, a similar tokenomics model to Curve with the VE. Um, how do you guys describe that tokenomics level from a high level, and what are your kind of goals for it?
So we're actually not fully launched. We set out to do a 3-phase launch. The phase one was the core AMM. Phase two was this concept of boosted positions, where protocols can incentivize a given distribution in a pool. So we launched that in March, and then like late April. And phase three is actually all the liquidity directing. So the equivalent of a curve gauge. We haven't launched that yet. We're still working on that. So that's a yeah, really a TBD. We haven't finished those contracts yet.
Do you have any kind of major ideas from how it'll differ from the Curve model?
I think I think so. Curve obviously super innovative in all kinds of ways, and one of them was tokenomics. I think one downside of the curve model is that once you've accumulated a whole bunch of VE curve, you can just incentivize a pool that's not very productive for curve or anybody. So this idea that you're a protocol, you're an early mover or whatever. Say you're a new stablecoin, you're XYZ stablecoin. You get a whole bunch of VE curve on day one. You can just vote your stable pool forever after, and you'll get curve emitted to your pool forever after, even though no one cares about XYZ stablecoin. So I think we're definitely want to fix that sort of mechanism where incentives aren't aligned. There's no reason to incentivize things that aren't good for the protocol. And for the protocol, we think about things that are good for the protocol as either adding TVL or volume or both. So that's mostly volume. We want depth, and we actually want to be providing useful liquidity.
And you've referenced Maverick as kind of a DeFi Lego to like a whole building stack. What do
Mhm.
you envision the progression of that stack to look like?
Yeah, so DeFi Lego or modular liquidity, I think, is a term I've seen um, people use in reference to Maverick. I think it's just this whole bootstrapping. So if you want to start a new protocol, or you have a new token and you want to bootstrap liquidity, there's all this stuff that happens around it. You need to get listed on exchanges, or on at least on CoinGecko and whatnot. To do that, you have to have a little bit of volume. You want to get oracles to pick you up so that um, you know lending markets will work. So you need an oracle in order for Aave to work, for instance. And so to get an oracle, you also need to have volume. So step one is you need to make sure you've got liquidity at price. And so I think that's kind of how I think about the Lego tower. Is Maverick is a piece of that Lego tower that's providing liquidity, and then you can go build out the rest of the kind of liquidity ecosystem for your token.
And touched on oracles a bit. This may be a slightly dumb question, but you guys are pretty popular. I think top few dexes on ZK Sync, and you were pretty early there. What oracle are you guys using on ZK Sync?
So we don't have an oracle. All when I say we move with price, the price is internal to the pool. So it's just the swap prices in the pool. So we don't have an oracle. We you can use our pools to be an oracle for other lending markets and whatnot. So that's I think Chainlink
Okay,
looks at Maverick pools to as part of the average of the oracle price they make. But yeah, we don't depend on oracle.
okay. And any any idea when the gauge voting will go live? Before I skip over that part.
Um, we were aiming for Q4. It looks like that's audits are taking a little longer than we thought. So it's probably Q1.
Okay. Any new features or anything we missed to touch on that you want to bring up?
Well, I think that we didn't talk much about the boosted positions. So that was
Mhm.
another kind of insight that making a distribution of liquidity is great, but if you want to enable the protocol to be able to shape their global liquidity, you need some mechanism for them to incentivize those distributions. So I think we're pretty unique in that. We talked to a protocol early on, Stable project, and they realized that in Stable Swap and Curve, every time they dumped incentives into their pool, they did that to try to hold peg. So if the pool is off peg, say it's 80-20 off peg, if it's off peg, then necessarily the asset mix is not even, right? That's curves. The price is based on the distribution, the ratio of the assets. And so if it's off peg, the asset mix is wrong, and ultimately the protocol to get it back to peg wants to change the ratio, right? So that it's 50-50. But they found that as they incentivized the pool more, they just made the problem worse because they actually made deeper liquidity at this kind of lopsided balance. So the neat thing about Maverick boosted positions is that protocols can incentivize any part of the price curve they want. And so if you're off peg, you probably want to incentivize, one side of the price curve, the token that's lacking in the pool versus the other. So that ends up being a neat mechanism. So that's live where protocols can externally add incentives to these boosted positions. What will come with the kind of VE incentive directing model is that MAV can get directed to those positions as well if you vote with your VE MAV.
Hmm. Okay. I also wanna just back up real quick. Cedo mentioned ZK Sync for a second. I remember like the reason I found you guys to begin with was because I was looking around at stuff on ZK Sync while I was just while it first launched to try and find anything cool that was on there. And I to be quite honest, like to this day, I still haven't found anything that's like worth checking out on there. Maverick was the one exception to that. Why did you guys launch on ZK Sync so early? What was the thought process there?
It's mostly going to be a new chain that needed. They were definitely going to have a DEX. They're going to have DEXs, and they were going to need liquidity. And I think, they definitely have some neat tech. I think maybe not all of it's realized yet. Like the account abstraction stuff that's built in is pretty cool.
Hmm.
But it was clear that it was really buzzy, honestly, and there was going to be tons of liquidity there, and somebody needed to be there to support that liquidity and have it swap. So uh, we thought we could scoop the incumbents, and it seems like we did. So yeah, that's why we went there.
Okay. And you got remind me again which chains you guys are on right now? You're on Mainnet, ZK
Base,
Sync, I think Base, that was
base,
recent.
base,
That's
and
right.
BSC. Yeah.
Okay. Do you guys have plans to expand uh much further past that? Are you planning on going to anywhere like Arbitrum, Optimism, one of the more like established L2s?
I think so. I think we'll probably wait for the rest of the contracts to get released. This kind of phase 3 launch we're doing. Uh,
What
yeah,
what is that? What does the
the
phase 3 launch consist of?
it's this incentive directing, the
Okay.
equivalent of gauges. Yeah.
Okay. Okay. Is that like top of mind for you guys for like the rest of the year for the next couple months is getting that stuff live, or is there any other like uh, newer feature rollouts we can expect to see over the next couple quarters?
No, that's probably Q1. So we're laser focused on that. You know, releasing contracts that we've got. I don't know. There was 17,000 swaps through the Maverick app yesterday. So there's a whole bunch of users. We got to make sure that it takes a lot of work to make sure you get the contracts right and audited and everything. So
Mm,
working on that really hard for the past 4 or 5 months for this phase 3 contracts.
gotcha. Okay. Um, and then just to like zoom out a little bit here. I mean, you talked a little bit about how kind of like Maverick would fit into like a larger like stack within D5 being this sort of like modular liquidity component, but more so in terms of like the development of that stack of that ecosystem. Where do you what do you see like Maverick being in 5 years, 4 or 5 years time? Like what does the long term vision kind of look like for you guys?
So I think there's just more stuff that gets built on top. I think you could have like gearbox leverage and stuff on top of Maverick. You can have derivatives built on top. We've got various protocols building snaps and other things to make it easier to move liquidity around. Tokemak's doing a liquidity optimizer for Maverick, and so are a few other protocols. So I think it's more of that kind of exterior layer. You know, we get barnacles built on top of us as we prove ourselves and exist in the ecosystem longer. Uh, yeah.
How would you build derivatives on top of Maverick? Would it be the same model that we're seeing with like Uni V3 positions? Or would it be different given that you guys use bins instead of ticks and you have moving ranges?
The core concepts similar. Yeah, same idea. Yeah.
Okay. Is there anyone working on that currently? Do you know?
I'm not sure. No, I don't know of anyone exactly. I know a project's doing all kinds of other stuff, but derivatives are tricky, like
Yeah.
regulation wise. So we see fewer projects going there.
Yeah. Yeah. Even I mean, the infrastructure even on Uni V3 is still kind of emerging there. I think there's like two projects that are like in alpha. I've played around with some of those and it's nowhere near like ready yet and um definitely not comparable to like actual derivatives dexes or like the derivative dexes we already know, DYDX, GMX, stuff like that. But it's definitely not like it's not comparable to that in terms of like experience and functionality. It's definitely not comparable to like anything centralized. So it's still
Hmm.
going to be some time I think before we see that stuff to emerge. Cool. I think we're like close to time on here. I know we talked a good bit about incentives, about kind of what the AMM looks like, advantages, disadvantages, stuff like that. Is there anything else you wanted to kind of highlight for our viewers? Any sort of like call to action you might have? Anything that we might have missed that you think would be important for an active community member to be aware of?
No, I think that's good. I think we're pretty active on Discord, so if you want to engage, feel free to come there. Happy to chat with folks. Um, yeah, and then keep an eye out, Q1 for our phase 3 launch.
Awesome. That reminds me. There was one thing that I forgot earlier on. I think I've seen maybe one or two projects building this. But essentially like obviously with Mavericks, with the way that your token model is going to look, a very like intuitive or like almost no-brainer use case is going to be project is going to be like a sort of convex for Maverick, or like an
Hmm.
aura for Maverick. Um, first of all, do you know of anyone who's building that? Second of all, are you guys at all like how like if you know of someone who's building it, how collaborative is that process going to be? Or are they going to be like their own entity kind of throughout the development process who's kind of acting of their own on their own incentives and you guys kind of just continue to do your thing, or is it more synergistic than that?
No, so definitely have had a bunch of people reach out. I think there's several that have now announced. So like StakeDAO, Spiral, Unlock, Rogue. Uh, there's a few others I think beyond that. Those maybe the biggest ones. They've already even got some. Each have VEMAV kind of locked up, uh, and so they all have different kind of value propositions. I think a couple of them are thinking about doing liquidity optimization as part of the service. Uh, Mav's a OFT token, so it's or OFT token, so it's natively cross chain, and but the VE is not, and so some of them have mechanisms for that, and I think the tokenomics, some of the drafts we're thinking about, there's some interesting cross thing train things that can happen. It'll basically be its own little island per chain, and so if you're a liquid locker or a convex that wins on one chain, you might not win on the next chain. We're not the Mav team's not. We're happy to chat with folks and talk to them and get feedback and whatnot, but we're not involved in any of them. We don't really want to pick a winner there. You
I was
got our hands full otherwise.
I was just gonna ask if you have a favorite. I don't know if I mean you just say you're not gonna pick a winner, but it would be interesting to hear if there's anyone that catches your eye in particular.
No, it's too early. I'd say all those teams are fantastic teams. I think we met all those guys at ECC. There's a lot of Europeans have gotten into Maverick. Um, so yeah, no, I think highly of all the teams, and like I said, they all have their own little twist on the problem. Uh, yeah, but it's too early to say who's going to be successful. I think there's room for multiple. I think the idea that just convex or just or you got one winner is probably not super healthy, and I think
Mhm.
you can kind of craft your tokenomics so that you don't have a winner take all sort of mechanism. And then the idea that we're doing cross chain so that you may win on one chain but not on another chain also comes into play.
Mm.
So we're trying to keep the playing field pretty level actually, and have it so that it's not a runaway winner.
Gotcha. Okay. Um, and then last thing, which I don't think you'll be able to answer this, but if you could, that would be awesome. Obviously the season one has been running for a while, Maverick Incentive season one. And I think a lot of people right now, not just on Maverick, on across, a host of different platforms have been either using the protocol just for what it is or specifically farming points. Just kind of waiting for whenever that drop comes. And I think with the market kind of turning around recently, we're starting to see a bit more of that stuff happening. I mean, like Pith, that stuff just happened. Hedgy, I think the Blur at season end kind of lined up nicely there. I know Arcade probably timed there as well with the market. Is there any timeline you guys have as to when season one might be ending and kind of what would happen at that point? Like, would there be continued incentives past that? Would you guys, does that kind of coincide with the Q1 rollouts you guys have planned at all? Or anything you can share in terms of like timeline on that?
Sure. Yeah, I mean, without getting too specific, I think it, it's you should think about all that coinciding with the launch of phase three, and we want to make sure the whole idea of incentives is to bootstrap a protocol, bootstrap liquidity. So ideally, the phase three kind of takes over that function, and you've got this automated kind of continuous system that incentivizes people to participate. So that's kind of how we think about it.
Okay. Yeah. Yeah, I think that totally makes sense. It's definitely the right move. It'll create like a nice little hype wave for you guys as well. When that time comes, have a lot of good rollouts coming. Cool. Well, that it about takes us to time here. I think it's a good spot to wrap up as well. Bob, really appreciate you coming on. It's definitely been a project that we've been a fan of for pretty much since day one, or I guess since you guys launched launch the protocol fully. So it's really exciting to have you guys on to talk about all this cool stuff. Definitely going to
Thanks.
be watching along for some of those bigger launches, some of those phase 3 rollouts. And yeah, we'll be in the stands either way cheering you guys on.
Okay. Yeah, appreciate it. Thanks for having me.